and the bulls are in full retreat mode, down 400. And if I were you, I would keep a very close eye on your portfolio here. A close below 25,000 today could have us waking up Monday morning with another Black Monday situation. And at 22,000, where I think the next level is, there are going to be a lot of stocks on sale. So you may want to keep your cash ready, keep your powder dry, because Monday there may be a bonanza going on for long-term investors. All right, well, I hate to be right sometimes, but seems like we were on the money to technical setup for a really, really rough Monday, and we're in the throes of it right now. The Bears are still in attack mode, that's for sure. The Bulls are on the run, Dow down like 1,700 as we speak. And, you know, when it's Money Monday, we bring on the money guests. You just heard from Chris Markowski, the watchdog of Wall Street, and now we bring in another one of my favorites. She's always on the money. Hillary Kramer joins us now. She's an investment analyst, portfolio manager, nationally syndicated radio host, and author of Game-Changing Investing. Hillary, I hate being right, but you know I'm an evil short seller, and I always look at the negative side of the market. And Friday, I just was looking at this thing like, wow, this is setting up to be like a really bad Monday if something happens. Here we are. What are you telling your clients? You know, I'm saying on days like this, stay calm. But what are you telling them that's a little more informational than that?
I agree. It's about staying calm, not capitulating and selling, and realizing that when there's blood in the streets, that's the time, if anything, to pick up some stocks, nibble here, and wait for a real bottom to form. It's okay if you miss the absolute bottom. But at the same time, if you need a place to put your money and you've already doubled your money in NVIDIA and software companies and storage and all those areas, it's really actually a very good time to be in those very safe companies like Hormel, Spam, Meat in a Can, that have 3.5% dividend yields. They also own Skippy. And
so these are like non-perishables, things that can last for a while.
Exactly. Yes, the basics, what will still be out there. General Mills, GIS, they've weathered so many storms out there in Minneapolis. And it's not just Cheerios, and it's not just Betty Crocker mixes. They've really ventured well into the healthy, nutritious snack food space, the dog food area, and even in the dairy.
You think us humans may have to resort to eating dog food? Is that what you're saying? This could get scary. I mean,
well, I'll tell you, it's an interesting time. I mean, it's really going to be a not dog food, but we have to understand that money doesn't. We don't have 10-year bull markets forever. They're called a market for
a reason.
Yes,
and right
exactly.
Right now, the market to me is saying it's way too uncertain out there.
Right.
And the one thing the market hates the most, folks, is uncertainty. Okay, you tell me it's going to be a bad next quarter, we know what to do. You tell me you think it's going to be a good next quarter, we know what to do. You go like this, I don't know, the markets get scared to death.
No, that's absolutely right. And so the other area to look is, it's very interesting. PSA, public storage, fascinating. It's in times when it's good, people need storage, you know, storage wars, they put everything in those storage containers. And when times are bad and people scale down and scale back, PSA, public storage. And there you also have about a 3.7% dividend yield, largest storage, self-storage in the United States. So that's an area to also think about. There's lots of places to find safety. What you don't want to do is try to catch that falling knife. That's what you have to be careful about. And then, of course, the banks. Now, John, this is my concern. Why are the banks down so much? Goldman Sachs is down more than 9% today. Is something going on in financials? Is something going on in the banking sector that we don't know about?
I would say yes. I would say, you know, if you remember, Goldman came out with some guidance a couple of weeks ago that they may have no profits for the whole next quarter because of the coronavirus. I don't know how, you know, 500 deaths can affect Goldman Sachs' complete quarterly, you know, profitability. But I will tell you this. Wells Fargo is in the throes of one of the worst situations I've ever seen. And I'm talking to some friends this morning. I'm not a financial advisor, but you know what? If you want to invest for the long term and you got some cash, you want to look at banks. Bank of New York, Bank of America is in the middle of a pronounced buyback program, so you're buying alongside with the company. But I will tell you this, all these banks will recover, and in my humble opinion, Wells Fargo is on its way down to single digits because they got all kinds of problems. They had 2 board members resign this weekend. So I don't know what's going on with Wells Fargo, but you might be onto something, Hillary, that there's a contagion again in the banks. And the last time when we almost had full capital markets Armageddon, what happened was the big custodial banks that control most of the pension plans in America, they broke the Fed fund, the dollar cash rate broke 1. So if you had your money in a custodial account, they were paying you 99 cents for every dollar. So they were charging you 1 penny just to hold your money and keep it safe. And when the insurance companies and the derivative houses figured out that we don't have $1 for $1 security on AAA investments, that's when everything started to break loose. And that could be what's happening here.
Yeah, that I think hits the mark. There's really something happening. And, right, and it'll come to light because the stock market is telling us that something's going on that's much bigger or different than coronavirus. Of course, we know that part of it has to do with an oil war between Russia and Saudi Arabia, but that also has to do with overcapacity and some intrinsic issues themselves.
Well,
with
you know what
that
I
market.
think on that front, Hillary?
What?
We're the largest net producer of petroleum now. The U.S. is, okay? So we've changed from a country that was dependent on OPEC to a country that's independent. We're not dependent on them anymore. And now Russia and China have been playing around for the last 6 months trying to come up with a petrodollar. They've been trying to come up with their own currency for people to buy oil with. And right now, oil and petroleum reserves are priced in the U.S. spot markets, in the futures markets, in U.S. dollars. So they've been trying to pull some of that from us. And I just find it coincidental, while China is paralyzing the whole globe, Russia comes in with a sidekick and decides to pull out of OPEC. And it's like a double whammy on our markets.
Oh, I know, absolutely. And there are oil companies, especially the shale producers, they need $50 a barrel to make it. So I just pray for them. You know, I do, because I want to see them make it, and I don't want to see any carnage here stateside.
The carnage is already begun. And I'll tell you what, we had noted economist from the Heritage Foundation, Stephen Moore, on here last week. And I was floating him some of my, harebrained plans to maybe boost the economy. But one thing a good friend of mine, Joe Salvani, said was that the president has the power through the Treasury Department to buy oil from the National Reserve. So if the president really wants to do something stimulative here, he can order Steve Mnuchin to stop buying from our reserve at $50 a barrel. And then the U.S. would set their own price for domestic producers. So we're only buying from the reserve from domestic oil. And if we don't have the capacity, then maybe that's the first place they should look for infrastructure spending, is build more refineries, because that's a major problem we have.
I am so with you on that. That's a real actionable way to handle this. Also, if we see some payroll cuts or temporary payroll tax cuts, and we have some tax legislation that gets pushed through really quickly, that's enough to get the market going in the right direction. Then everybody, hopefully the greed takes over instead of the fear, and then everyone will go back in and we can get back on track.
Well, my other plan that Stephen Moore didn't like was, I feel like this is more monetary than fiscal, what's happening. And when things start slowing down, the big companies, they can withstand a little bit, right? But mom and pop, Main Street, the guy at the local corner store, the butcher shop, all this other stuff, they can't withstand the slowdown. And more people start ordering from Amazon and Whole Foods and Trader Joe's. Those guys are getting slammed, okay? And 80% of the people in America who are employed by small businesses. One of the things I proposed that Stephen Moore laughed at me was give any businesses under $50 million a year in revenue a 6-month payroll tax holiday. So they don't have to pay their payroll taxes for 6 months, and they don't owe it back. And you want to see some stimulus, small town America, Main Street America will jump up and down, and they'll know that there's a life support out there.
Oh, that would make all the difference. It would make such a big difference because these small businesses are the ones that are so much more vulnerable. So many of them are in the service industries. People aren't supporting them. They're not there. Everything, from restaurants to, delivery companies, you name it.
Yeah.
All of these companies are struggling. So
Little hardware
let's see
stores.
if we could get something for the small business owner. That's the way to help Main Street.
How about the Main Street payroll tax holiday, right?
I like
Where
that.
Mr. President, Larry Kudlow, Stephen Moore, all businesses under $50 million a year in revenue, 6-month tax holiday, and that'll be stimulus for Main Street and small businesses to know they're safe. And they're not going to start laying people off and taking money out of their 401k and getting penalized on it. They're going to be sitting there saying, my government cares. And we care about you very much for watching us every day. Hillary Kramer, thank you so much. And you know what? If all else is going wrong, invite Hillary Kramer on your show because she always comes bearing gifts. And if your portfolio's out of hand and you're trying to stay calm, you might want to try out this Prosperity rum because Hillary brought it for us today, and we may just, by the end of this day, have to take a sip.
That's right, and it's from Atlantic City.
And it's from AC, New Jersey, but just gamble in AC. Don't gamble with your portfolio. We're going to take a quick break right here, a couple of commercials, a few words from our sponsors, and then we're coming back right after this with Fernando Uribe in just a few minutes. Stay right there.